Let's face it, we all want to be like Warren Buffett. After all, he went from being a small-town kid who worked in his grandfather's store to becoming one of the wealthiest and most successful investors of all time. He has achieved incredible success through wise investing and has been able to grow his net worth to over $100 billion. So how did Warren Buffett start his journey? How did he make that first million that built the foundation for his empire? In this video, we'll explore how Warren Buffett made his first million and also look at how investing works, using Warren Buffett as an example. Let's dive in. Like the video and subscribe to Financial Freedom for financial videos. Let's start the video. Warren Buffett's early years as an investor. We all heard about the incredible success of Warren Buffett. But how did the legendary investor get his start? It all began in an unassuming way with an investment of just $100. Buffett had grown up in Omaha, Nebraska and had saved money from various odd jobs he had gotten since a young age. In 1942, at just 11 years old, he made his first investment. With that $100, he purchased 3 shares of City Service preferred stock for himself and 2 for his sister. For Buffett, investing was like playing a game. It was something he took to naturally and enjoyed doing. He shared keeping track of stocks he was interested in and reading the Wall Street Journal daily. As he grew older and more knowledgeable about the stock market, his investments grew significantly larger, eventually leading him to that first $1 million moment in 1962. The start of Buffett's investing career. Before Warren Buffett made his first million, he had to get started investing. He began learning the basics of investing at a young age and started to take it seriously in high school. At that time, he would pick up stocks from the newspaper, analyze them, and decide if it was a worthy investment. He also ran various investment partnerships over the next couple of years. In 1956, Buffett took control of Berkshire Hathaway and focused on investment based on value investing principles. By 1964, Buffett was well known on Wall Street, and his partnership value had grown over 50 times since his starts in 1956. This success essentially made him a millionaire by the age of 34, and Warren Buffett hasn't looked back since. How Buffett built his investment portfolio. One of the most impressive things about Warren Buffett was he built his first $1 million portfolio by investing in stocks. He started with a meager amount of capital, but through careful investment and strategic planning, he eventually turned it into a high return. The key of Buffett's success was simple. He bought stocks when they were undervalued by the market and held on to them for a long period of time. This allowed him to benefit from both long-term appreciation as well as dividend income from his investments. Let's take a look at how Buffett did it. Number 1. He first identified companies with strong fundamentals like high cash flow, good management teams, and a product or service that had lasting value. Number 2. He then studied the price at which these stocks were trading and looked for opportunities where their prices were undervalued by the market. Number 3. Once he identified such opportunities, he invested in them and held on them for years at a time, long enough for their prices to appreciate significantly in value, as well as earn dividend income through regular payments made by the companies of shareholders. Number 4. Finally, when the time was right, he sold off his holdings at higher than purchase prices and moved on to the next opportunity, or simply reinvested those proceeds into other investments. By following this strategy consistently, Buffett managed to accumulate an impressive portfolio that eventually allowed him to reach that first $1 million mark in just 5 years' time. The big bet on Berkshire Hathaway. In 1964, Warren Buffett made a move that changed his life forever. He invested in a struggling textile company called Berkshire Hathaway. At the time, Buffett was renowned as a top investor and had already made millions. But it was this investment that skyrocketed him to billionaire status. What was the investment? Buffett invested $25 million in Berkshire Hathaway, which at the time was an undervalued textile manufacturing company. Berkshire Hathaway was already well established within the industry, but it had been hit by economic downturn, giving Buffett a chance to buy at a low price. Why were profits so high? Buffett bought out the company and then rebranded it as a holding group of multiple businesses. He then used his reputation as one of the world's best investors to attract other companies to join his holding group and get access to his expertise and massive capital base. It worked like magic. The investment paid off tenfold within just 5 years, turning Buffett's initial $25 million into over $1 billion in profits. How Buffett invested in famous companies. You've heard of companies like Coca-Cola and American Express. Well, Warren Buffett invested in those notable companies. And that's how he made his first million. Buffett was able to get in on the ground floor of some pretty iconic brands. And here's how it worked. Analyzing companies. The way Buffett invests is simply yet effective. He studies the company and its financials very closely. He focuses especially on cash flow and value, so that he can spot a good deal with more accuracy. He looks for companies that aren't overvalued and that are well run. When he finds a company he likes, he buys it, which is exactly what he did with Coca-Cola and American Express. Investing early. With companies like Coca-Cola and American Express, Buffett bought stock before the prices skyrocketed. At total, Buffett invested well over $1 million in these type of companies in the 1950s and 1960s, and today his estimated net worth is around $90 billion. Why Warren Buffett is the ultimate investor. So why is Warren Buffett the ultimate investor? It all comes down to his investment philosophy as a disciple of Benjamin Graham. Buffett follows the fundamentals of value investing and has become successful by focusing on buying companies with strong fundamentals and a wide moat. What this means is that Buffett looks for companies that are well managed, have strong balance sheets, and exhibit principle-centered investing behaviors. He also pays attention to macroeconomic trends and keeps a close eye on the markets to make sure he's making smart investments. His focus on long-term investments such as stocks and bonds, rather than short-term ones like derivatives, has also served him well over the years. Warren Buffett has mastered the art of seeking out bargains in the stock market, meaning he's bought stocks when they were overvalued and sold them when they were overvalued. He was also willing to take calculated risk which paid off. For example, during the 70s recession, he purchased Berkshire Hathaway stocks at 1/10 its original price, leading to comfortable returns in subsequent years. Finally, his persistence towards adhering to his investment principles, it's what's kept him at the top of financial game for so long. Conclusion. Warren Buffett's journey to becoming one of the world's wealthiest investors was far from easy, but the lessons that he has imparted over the years have proven invaluable. Smart investments, diversification, and a long-term outlook are all key elements in a successful investment strategy. But most importantly, commitment and fortitude are essential in order to stay the course and reap the rewards. Achieving financial independence takes discipline and hard work, but it can be done. Just look to Warren Buffett as an example of what is possible when you invest wisely. With the right attitude and strategy, you too can follow in Warren Buffett's footsteps and one day make your first million. If you enjoyed the video or learned something new, then please like the video and share it with your friends. And don't forget to subscribe my YouTube channel, Financial Freedom.